get something done, if it holds near and dear to you that you like to be able to, anyway, from Charlotte, another line going from in Florida down to Tampa.
Hey James, I'm back from walking my dog. Took forever to start here, and it took over 2 hours for our preambulation. Then I had a call, so I'm a little bit late. But I think you're going to see some news on. It's not going to be trying to imply that, but it'll go towards building credibility in getting things done. And I think it'll be today. It might be tomorrow. Could be Wednesday. Who knows? Uh-oh. I don't.
Well, it was a weekend of worry. That is not how it
I don't usually listen to Fox Noise.
Actually acquired the UK assets.
Isn't that amazing? HSBC buys the assets of. It's almost like the big banks are in trouble, and so what they're doing is organizing runs with the Fed's help or banks so they can bring in assets. And oh man. I'll show you something so that all you doubters realize that I wasn't always this way. Anyway, so GTII went as high as 195. It really looks like it's going to try to break through that $2 level, you know. I should learn how to organize my items into files. I'm not good at that, so I never was good at that, ever. I always knew where things were, but I didn't know how to have a file cabinet. Hang on 1 second. I'm gonna go silent on you. Sorry, my apologies. Usman, but luckily, I think our impatience or our patience could be rewarded very soon in GTII. Let me look at the price. 182, so they got it down. It went as high as 195. There's no volume, so it's all fake. They're getting it down to 181 and 185, 552, as Ham would say. It's the same patterns over and over again, the same patterns. But Bill Guzman, I just told everyone I anticipate, I'll tell you what I think's coming. I don't know for a fact, but I think the West Christian lawsuit is, and I think it could be today. And the reason I say that is it was I got that dollop of news, which should do two things. One, it should give credibility to give GTII credibility to shareholders who have been listening, hearing things promised, and then they always seem to get delayed. I think it'll be a boost. But more importantly, you've got market makers, brokers out there. They've got the FBI going after this guy, Andy, I think this is a broker's name, and his clients. Regarding GTII, you've got the DTCC and the NSCC. I guess Alpine got to stay until the end of this month, but if they want to continue their business looting other companies. All right, so it's 183, 184. The market's really calm. Let me see if there's any new news about Joe Biden insists that our banking system is safe, which gives me tremendous comfort. That guy knows a lot about banking. Americans can have confidence that the banking system is safe. And that's all I need. And then he says that Janet Yellen took immediate action to stop contagion. And then he mentions among small and medium banks. Last time, in 2008, the shelter from the storm was the small banks. But to me, it seems like the big boys are in trouble and they want to get these assets on the cheap. Americans can rest assured, I like it when I can rest assured, that our banking system is safe, he reiterated. It's interesting, some of his words. He says they knowingly took a risk, and when the risk didn't pay off, investors. So he's talking about the shareholders. Okay. This is the head of risk management at SVB. You can't be what you can't see has always been a quote that's stuck with me. I don't know what DRM refers to. Ensures that future generations are seeing such a variety of role models, and I could not be more excited and privileged to be part of the organization's journey. Jay Ursapa. Much. Well, the Fed warned. It warned. And the Fed slowly raised, well, a year's not slow, I guess, compared to a decade, but it's pretty slow. You have a chance as the risk manager of a big bank, you have a chance to start selling out, repositioning your portfolio. I mean, why not just buy the T-bills instead of these long and then just keep them rolling? But anyway, if I was so great, I'd be in her position. No, I probably wouldn't, because I'm a creaky old white guy. Small banks are crashing. See, I think they being the big four banks want the assets. I'll show it to you, but I think I don't know what's on the loans plus securities as a percentage of deposits is on the bottom. Lower risk deposit base. Anyway, I think the risky stocks are up in the upper top farthest away. Anyway, that upper right hand quadrant are the riskiest banks, I think, by this. Wells Fargo is almost there. I don't know who H Bank is. Key, TFC, FIT. Oh, maybe I'm wrong. Maybe the riskier is just going to the right, and it's the lower. Being on the right side is not good, but lower level is bad. So anyway, I don't know any of those symbols. It has, wow. Oh my gosh. Here's the regional bank index. How to create a panic. What happened? I just think the big boys want to come in and take the assets, take the equity from shareholders out of the equation. KRE down 30% in the last week. A rare short-term plunge for something so diversified. First Republic Bank halted for volatility, down 65%. PacWest halted for volatility, dropped 41% to the lowest level on record. Regions halted for volatility after 31% dropped to 20%. Oh, pairing, it went as low as 31% down and it recovered to being only down 20%. Western Alliance sinks to a record 70. Let me see, I guess I have to save it because it's not cooperating. Here it is. I don't know what FRC is. PacWest, Zion Bank, WAL, I don't know. Those are the bank's action today. With WAL on the far left, the next one is FRC, and then PacW, the third one in. It's not particularly nice. JP Morgan is reported to have $18 trillion in deposits, trillion. So guess who's gonna gobble up all those banks in trouble, in my judgment. Let me see if there's any update. The news sources that I'm following, they all have all this stuff about the Oscars last night that caught our attention this morning. The shares of this troubled bank trading in Switzerland, no kidding, plunged as much as 15%, hitting a new record low. This decline was attributable to concerns about the bank's ability to recapture client funds and other things. Crisis of confidence throughout the banking industry. As a result, Credit Suisse's 5-year credit default swaps jumped to a record high of 448 basis points. Credit Suisse's demise and shares falling to a record low come as the bank faces a long list of challenges. Anyway. And then, I don't know who this is, and I'll try to do it. The last few days have been rainy, but I'll try to do it so we have a better internet. I just wish we could move on. Then we wouldn't have anything to talk about, I suppose. But I wish we could move on from this long national nightmare. Okay, Michael Hernandez, it's my opinion that they're going to pump it till the complete collapse. It's possible. Hey, Lion. Well, I think, let me look at, it's down now at 180. It's down 7 cents, GTII. But other than our built-in impatience, which I understand, I have the exact same thing. These orderly rallies are death to the shorts and good for us. But we're all impatient. It's normal to come back and test the line. And if you can see right here, right there, there's a gap. Right there, there's a gap. I think that gap, it's right above February 13th almost. That gap will get filled. And I think that gap's around 220. I don't see a lot of resistance. There was some volume in the 3 days before that gap happened, but it looks like it was all on the red. I just don't think that's going to stop a whole lot. Then there's the $2.50 to $3 range. And my bias is that's not going to hold everybody up, but you can see all that gray volume under it. That could be a source of some selling. And then I don't know if I did my cornball analysis on this phone or not. Let's through. So anyway, I think my answer to you is I think this chart looks great to the extent that charts matter. You're getting the MACD crossing over. Anyway, I think it looks good on GTII. Fade everything you have here from MSN and the pundits. Yeah, Michael Hernandez, the catalyst, 1-800 law firm, the dividend. But I think the next catalyst, I already admitted, just because I expected it last week, even the week before, I think it's going to be the West Christian lawsuit. And it may not change things instantly, but I think subpoenas for records and requests, whether he goes after spoofing, touch this stock, I don't think. Let's go look at the price again. 181, starting to come back up. 181. So I guess $2 might be just a psychological number, but I would say 210, 215 by the close. Dead cat bounce before crazy crash. I don't know, Young Lee. That's kind of how CRTD has traded. And I don't know if you're talking about what you're talking about, really. But I'm not trying to be negative on CRTD. That's the only one I can think of that fits that description right now. I think CRTD is going to have a distribution. Yeah, David Angel, deregulation started under Trump. It actually started, depending on which deregulation you're talking about. Jimmy Carter did a lot of deregulation. But in the financial markets, Bill Clinton takes the prize. George W. Bush did a lot of it. I'm not sure. I'm trying to remember under Obama if he did or didn't. But you're right. Trump is the reason. We can all admit he's the reason for the bank failures. I'll just agree to that. because I really don't. I'm not trying. You know, when we say we can't talk politics, but politicians are the root of the problem, you're automatically saying we can't solve the problem. And I really don't care if it's a Democrat, Republican, or independent. Was some sort of requirement from the banks. But there were a lot of emergency decisions, and you know, you gotta place the responsibility where it lies. 185 down 2, and you know, just imagine how much worse off we'd be if Trump were in office. I mean, thank God we've got the reasoned leadership of Joe Biden and Kamala Harris. All right, 186, 185, 186, 696,000 shares. 186. So Jenny, I don't know what to talk about exactly, because the markets look pretty boring. I thought we were going to get some action. CRTD, let's just look at some of the other prices. CRTD is down to 15 cents, 16 cents. And that fits that guy's description. It has bounced to 20 cents. In the press release with the prediction or estimate, I guess, that it could be worth 7 to 10 times that number. So it's unfortunate, but I think we got to stay there. COSM 350. That's actually holding up pretty well, all things considered. Logic is 32.75, 30 to 35. I will do a video on that Wednesday, depending on whether I can, but I can't do anything right now. 30 to 35, 39,000 shares. I don't know what this TRK is, but it's down 24 cents. That's where it's trading. And Go Logic, I think, was down. Things and buy it. It's just for information right now. They're going to the shares that were issued 2 Decembers ago are going to be free to trade toward the end of April, roughly. So that could bring in some selling, but in their press release, they talk about it. There's more deal flow. There's additional deals that they're going to do. And one of the great things of both GoLogic and Logic is these small companies that have great teams wanted to access the public markets, and the IPO market is dead right now. So that gives public companies with I don't know what to call it, with some critical mass, the ability to other companies and really build a powerhouse. All right, simple fact is there was a binding letter of intent to merge, to be acquired by GTII. And in the press release, the target was $3 to $5 a share from CRT. He wanted to put a collar in there, but it was pretty simple. It was a $100 million acquisition. At the time of the announcement, there were 30 million shares outstanding. A few weeks ago, 2 or 3 weeks ago, they disclosed how many shares were issued back in September, I guess it was. So now, and they gave the executives, including Jeremy, a lot of stock. So now the number of shares outstanding is around 89 million shares. So if you use 100 million and you use $100 million acquisition, it's $1 a share. Then that's way down from the original target of $3.30 a share. To distribute, and that's been reiterated via upstream, the OG collection, which is valued at $10 million, just under $10 million. I know, Vichim, you're a busy man, but you can go to Google. Google created without an E, CREATD, and up will pop their website, and then you can hit news, investors news, and you can see that they made the announcement, reiterated that they are going to distribute the OG collection on upstream. They also said that the value of the OG collection, which is a viable business, could be 7 to 10 times the initial value. And then he's going to do other distributions as well. So, yeah, Vichim, you're right. Nothing happened. I think we'll go with that, Vichim. I'm in the mood of just accepting rather than arguing. I'll just accept as a fact that there was a lot of pump up for CRTD and nothing's happened. I don't know who valued it, Jay Roach, but there is some what's the word? You could challenge the valuation a little bit if you wanted to, but an investor from it's in the release, but I believe it's Dorado something LLC committed to purchasing a quarter of the OG collection at $2.5 million. The way I read the press release, they actually completed that trade. You'll have to check the press release. So if a quarter of it's worth $2.5 million, 100% is worth $10 million. But there was also an outside appraisal, and I don't know who did that. Hey, Army Ann. Army Ann. My sense of humor. If you're laughing at my jokes, the rest of the comedic culture must be really low. Yeah, I know. That's why they call it a market. For everybody that's negative, that's why they call it a market. That's why they call it the blues. Time on my hands. 186, 734,000 shares. Takes a long time to get to 1 million now. Hey, Son, good morning. Oh, by the way, it's almost 11. I'm going to have to go at maybe earlier, but certainly by 11:30 I have to go because I have to actually, shave and get ready for an impotent conference call. Bitcoin is up. Hey, MKC. Yeah, Pistol Pete, I think the shorts are still in there, pushing down GTII. They're clearly not afraid of the feds or the SEC. And it's quite likely they're operating from offshore. And it's also quite likely that once a lawyer like Richard Nadich, I'm not saying it was he, fills out all the forms and provides suitable letters, that these LLCs, which are multiple, have approval just to enter their trades by computer, or call their complicit broker / market maker, and they just put the orders in by computer. No one's checking them. No one checks it. But I would have to guess that some of these positions that have been aggressively sold over the last few weeks are in trouble, and they're trying to contain it. Once they stop, it's all over. So they're trying to contain it. But the buying has dried up in some ways, but somebody's buying. Somebody's buying. I know that we're all tapped out, but somebody's buying. It's orderly. I do not think any of you are selling here. I'm not saying you shouldn't. If you want to sell, sell. But no, I think this manipulation, which is illegal, it's fake volume, which is illegal, it's crossing shares. Remember, I don't know, you probably don't watch Family Guy, but this substitute teacher came in and she had, a rather large presence, and she holds up Chris Griffin's test result, and it has a big circled red with a F on it, and she holds it up. Chris, can you tell me what you see? And he said, I don't know, 2 D's and an F. Anyway, that was Family Guy. MMAT is green. Let's look at that. I haven't looked at that in a while. Another poor company. You know, these companies that have something, they still get crushed. Wow, that's good. 53 cents. Can you believe that price? Unbelievable. That's great, MKC. All right, so let me go see if there's any news. Janet Yellen did a great job. Where can I find the news that I want? Just go to the same old sources. Banking system safe. Oh, here's what Schiff is saying. I'm not an enormous fan of his, but he's been spot on. I guess he has his own. He used to be with Pacific something. Now he has his own company, Schiff Gold. In the wake of 2 bank failures, the Federal Reserve and the United States Treasury announced a bank bailout program that could be dubbed QE Extra Light. That's what Peter Schiff is saying. Last week, no, this is written by Michael Mahari. It's on Schiff Gold's website. Michael Mahari is writing it. Last week, Silicon Valley Bank was shuttered by federal authorities after the bank suffered significant losses selling bonds in order to raise capital. When that news hit, and do you understand that? When you're a risk manager and you're spending your time working on diversity instead of managing the portfolio, this is the kind of thing that happens. She had months. She had an entire year to be readjusting her portfolio. I don't know. When that news hit, depositors rushed to pull funds from the bank, making it functionally insolvent. Then over the weekend, federal authorities shut down Signature Bank. On Sunday, the FDIC created bridge banks to handle both insured and uninsured customer deposits. They used to call that the good bank versus the bad bank. Banking regulators assured depositors that they would have full access to all of their funds. That's as long as people trust that as dollars are printed, they're valuable. The quote, the name of it is the Bank Term Funding Program, the BTFP, will offer loans of up to 1 year in length to banks, savings associations, credit unions, and other eligible depository institutions pledging U.S. securities, agency debt, and mortgage-backed securities, and other qualifying assets as collateral. Banks will be able to borrow against their assets at face value, at par. No one's rescuing you. But this woman bought long-term bonds at 1 or 2%. Rates go up to 5 or 6 or 7%. And now the government comes in to rescue her boneheaded oversight while she's focusing on how few white straight males are in the bank. And the government has to bail her out. Just as a matter of course. I am woman, hear me roar, in numbers too great to ignore. According to a Federal Reserve statement, the BTFP will be an additional source of liquidity against high-quality securities, even though they're going in, they're going to loan at par value, 100%, when the market for these securities are 65 cents. Can you get a deal like that? Are you able to call up Janet Yellen and get a deal like that? Unbelievable. That'd be like, I want to borrow against my GTII position. I paid $7 a share. It's trading at $2. Well, we can lend you 50%. We'll lend you $1. Well, no, I want to get my money against the $7 that I paid. Oh, well, we have a program, the BTFP program, so we can lend to you versus the price you paid. Unbelievable. It's the Exchange Stabilization Fund. This will help banks ostensibly avoid the situation that brought down Silicon Valley Bank. Last week, SVB sold a large portion of its bond portfolio at a $1.8 billion loss. CEO Greg Beckey, and where was he? Greg Beckey should have had the brains to say, we're not going to put our future out on long bonds at the lowest interest rates in history. What an idiot. And then he sold his shares before you had any knowledge. That's criminal on Greg Beckey's part, in my opinion. He said the bank made the sale, quote, because we expect continued higher interest rates, pressured public and private markets, and elevated cash burn levels from our clients. What a genius. The bank bought the bonds when interest rates were low. And we have to rescue them from that idiotic decision? As a result, the $21 billion available for sale bond portfolio was not yielding above cash burn. Well, why lock it up? That guy should be arrested and put in stupid school. Meanwhile, rising interest rates caused the value of the portfolio to fall significantly. When? Last week? They've been raising rates for a year. Can't Greg Beckey look forward and say, you know what? We better start rolling out of some of this. He could have taken much less losses if he had sold everything 9 or 10 months ago. And then he could be in layering in higher yielding bonds. But I guess that's why he earns the big bucks and has the hot chick wife. The plan was to sell the longer term, lower interest rate bonds and reinvest the money in shorter duration bonds. Yeah, no kidding. Why didn't you do that 10 months ago? The Fed was warning you with a higher yield. Instead, the sale dented the bank's balance sheet and caused worried depositors to pull funds from the bank. Now, in his defense, and in the, I forgot her name's defense, the naked shorts, the criminals, came and destroyed the stock price of this stock. They got this down in a day. And don't think Goldman Sachs is immune from that kind of attack. Many other U.S. banks are likely in the same situation. As the Fed jacked up interest rates to fight price inflation, it decimated the bond market. But what he's not saying is all these people being paid a lot of money to protect the livelihood of their banks, the Fed gave clear indication of what it was going to do. Do you think the guys over at PIMCO or there's a banking analyst that used to be at Deutsche Bank. She was really good. I'm forgetting her name right now. I can almost remember it. Do you think she would be waiting, doing nothing? I don't think so. I'll remember her name. As interest rates, I mean, she was, I almost had it. She was so good. She predicted the bank crisis, almost 15 years ago. She was excellent. But anyway, you take action. You don't just sit there and then a year later say it's the Fed's fault. $1,000 salaries. And then all the stock awards. With interest rates rising so quickly, a year, banks have not been able to adjust their bond holdings. That's just a statement. Banks have not been able to adjust their bond holdings. Banks didn't want to. They didn't want to take the losses when the losses were cheap. Now that the losses are dear, they're being forced to take them, and then you're paying for their stupidity. Jenny could run a better bank. As a result, many banks have become undercapitalized on paper. The banking sector was buried under some $250 billion in net unrealized losses on bond portfolios because they didn't do anything. Anyway, people are people. Just because they have a title doesn't make them smart. And the whole problem is you get dislocations, as they call it, when you have cheap money for so long. People make bad decisions. The BTFP gives banks a way out, or at least the opportunity to kick the can down the road for a year. Instead of selling bonds that have dropped in value at a big loss, banks can go to the Fed and borrow money at the bond's face value. It's a ticking time bomb. Do you think interest rates are going to go back down in a year? I suppose they could if we go into a depression. You could categorize this plan as quantitative easing extra light. Understand, this is not exactly QE. The Fed is not buying treasuries. It will only hold them as collateral for the loans. Once the loans are paid back, the treasuries will go back on the bank's books. But it is like QE in the sense that the Fed will create money out of thin air to make these loans. That is inflationary, just like quantitative easing. Although the inflation is ostensibly temporary. When the bank pays back the loan, the money will drain out of the system. Of course, that assumes that the loans get paid back. Also, like QE, the Fed is putting its thumb on the bond market by giving incentive to the banks and other institutions to hold treasuries instead of selling them into the market. Exactly. In effect, it creates an artificial limit on the supply of treasuries, which will artificially keep prices higher than they otherwise would be. I guess that's a good statement as far as it goes. In effect, the Federal Reserve loan program will have some of the same systemic impacts as QE, but on a much more limited basis. Is this a bailout? The powers that be insist that this is not a bailout, but it absolutely is a bailout. The plan creates mechanisms for banks to acquire capital they couldn't otherwise have access to under normal market conditions. Meanwhile, uninsured depositors will get their money back. The government can plausibly claim it's not bailing out SVB or Signature Bank. Both institutions appear to be doomed. But the government is bailing out uninsured depositors, and it is setting the stage to bail out other banks that would have suffered in the same fate without the loan program. In effect, the loan program and deposit guarantees signal to other banks that they have nothing to worry about. It also calms the public and lowers the likelihood of bank runs. Now, will taxpayers foot the bill? The powers that be also insist this won't cost taxpayers. Again, in one sense, this is true. The U.S. government isn't going to raise taxes. And the only way the taxpayer would be directly implicated is if any of the banks taking the loans default and the Fed taps into the $25 billion credit protection extended by the U.S. Treasury. But as Peter Schiff pointed out in a tweet, the taxpayer will be on the hook for the inflation tax. This is what Peter Schiff said. According to POTUS, the government bank bailout won't cost taxpayers any money. That's a lie. I'm just reading YouTube. I'm just reading what Peter Schiff said. That's a lie. While it's true that no one's taxes will be raised to pay for it, the Fed will print lots of money to cover the cost. That's inflation, and everyone will pay higher prices as a result. Even if it's only temporary, the loans will inflate the money supply. That is the definition of inflation. And looking at the bigger picture, this bank bailout means the end of the Fed's inflation fight. That's the article. What's coming tomorrow is the CPI. So GTII, 186, 187. I don't even know if I'm talking to any of you guys anymore. So maybe I'll hang up. It's 11:14. I'll wait till 11:15. Maybe I got disconnected. That's too bad. That way I won't see Army in. 186, 187, 186, 187, 11:15. Well, all right.